Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Uh, Earnings season's about to start, so I figured I would do a couple videos just talking about some things that I normally look for or look out for when it comes to playing these earnings reports. The latter, so something I look out for are stocks in well-defined trends. Um, Typically, I don't like to play stocks in well-defined trends for an earnings release. Okay, so let me just walk quickly through why. Usually, people say, well, people typically say the trend is your friend, right? Because when we're in like a trending tape, or if a stock's in a well-defined trend, it can lead to like kind of like consistent action, right? Stocks respect moving averages, consistently make lower lows, lower highs in this case, right? And it's a little bit more easy to identify maybe like the future price action on the stock because it's been very steady, consistent, and methodical for a long period, right? But when it comes to that steadiness, right, that consistent action, some of that is due to expectations, right? People know the story; they're familiar with the story. In this case of Helen of Troy, the stock has been steadily walking lower for several months because the fundamentals have been getting worse, right? Inflation's eating away at margins or impacting like the company. So it's very one-sided. The stock has been down; it's been consistently lower lows, lower highs. Last few earnings have been less impressive. So, with that consistent price action comes one-sided expectations, right? So, going into earnings last week, the expectations were low. People weren't expecting a lot, right? And typically, when you have like these one-sided expectations, I find that could lead to like more muted volatility. So, for me, so whether that's in like consistent downtrends or consistent uptrends, I tend to avoid stocks that are in really well defined trends around earnings because of that like more suppressed volatility. So Helen of Troy is a good example. It had a weak guide, opened red, and then immediately bounced back into the trend, right? So like now that the earnings release is played out, right, implied volatility should start to come down because the catalyst has been removed. And what do you do with Helen of Troy? Well, the stock the stock has been in a well-defined trend, right? There's no reason to think that it can't continue in that well-defined trend because it had a weak open, a big bounce, failed at trend resistance, and for right now, I mean the stock is below moving averages and within that trend, so expect the trend to continue, right? So like that's how I would rather approach these trending patterns. It's like wait until the event, right? Stock is still in the trend, expect the trend to continue, and then maybe look for a resumption of the trend either a few days or maybe a couple weeks after the event, especially once the option pricing comes in a bit. Okay, so if you watch the earnings on the radar videos and you hear me talking about like trending stock into earnings and why I'm probably not going to be looking at it. I mean, this is one of like the main reasons. It's like consistent action, consistent expectations, right? Kind of like one-sided. So either people are in love with the name, know the story, it's had great earnings for a while, or in this case, of Helen and Troy, earnings have been deteriorating. It's been one-sided on the downside, steadily walking lower, and expectations are very low. So um, you're going to see more of this because the overall market has been in a downtrend now for a couple months. But trends can break, and once they do, it could really open up volatility. But until that happens, this is kind of like my playbook around earnings. Okay. So if you like this video and you're looking for more information about trading events with options, please follow up with the link in the description of the video for more information on options and play. Have a great night, stay well, and I will talk to you all tomorrow.